Welcome back to Liberty and Finance. We're delighted to have this returning guest for a live stream weekly market update after a significant hiatus overseas. Andy Schectman, the CEO of Miles Franklin, is back with us again here for this live stream. Andy, thanks for coming back on Liberty and Finance.
Good to be with you. I think I'm going to film the sequel of Planes, Trains, and Automobiles coming to you from a hotel room here in Minneapolis, actually. So thanks for bearing with me over the last few weeks, and again here tonight. Hopefully this goes well, but Dunnigan, it's great to see you. It's great to be back. It's been too long, so thanks.
It has been too long. I don't think any of us could have anticipated how much we would miss this regular weekly get together. We filled in 1 week with Ask the Brokers Live. Then last week we just had a regular publication instead of the weekly market update. I don't think we've missed a weekly market update in a long time. So I'm sure that our viewers, we've got quite a few of them here out watching this live stream and submitting questions for you already. So one of the questions that a lot of people have, it's gotten a little bit quiet. We had just a flurry of purchasing activity and people really concerned about, well, first it was the Ukraine war and how that was escalating. It was SWIFT system pressures and de-dollarization and spiking interest rates on the 10-year bond, actually on mortgages, a lot of other things going up in rates. And then it seemed like for about the past 3 weeks here, things have gotten a little bit quiescent, as though the calm before the storm, perhaps. Would like to get your take on that before we jump into some viewers' questions. I know you've been a little bit disconnected from the daily thrum and hubbub of this with some of your out-of-office activities. But if you could give us sort of your take on this pause we may be seeing at the moment. And I'll circle back with you later on the same question, because we've been seeing additional posts from several analysts talking about big multi-year cup and handle formations and poised for breakouts and all this stuff. But what we're seeing now is a bit of stability for the first time in a long time. What are you seeing?
Look, one of the things, Dunnigan, that marks the difference in this industry over years past is we've talked about it before. We like to use euphemisms and metaphors, and we talk about how for years we were preaching to the choir. We were speaking to the people who had been involved in hard assets and precious metals for a very long time. And since 2020 that we have expanded, we talk about into the audience and even across the street, a larger swath of people have come into this industry over the last couple of years. And I think that to a large degree, many of the people who came in late came in with intentions of making a profit. And look, anytime you make an investment or buy an asset, you expect it to appreciate. And in an environment that we are seeing with massive runaway inflation, with geopolitical problems, war, with political issues, moral and social issues, and all of the things that are all coming together at the same time, one would expect that this would be the environment that precious metals would excel in. And I think that a lot of people have become a little bit disenchanted, perhaps, with the lackluster performance of gold and silver. Now, look, the bottom line is simply this. Is it lackluster? Let's talk about gold for a moment. When you look at all of the major asset classes, you look at like Bitcoin down 35-40% for the year. You look at the FANG stocks, Facebook and Apple, or Amazon, Google, Netflix, they're all down between 30 and 60%. You look at the Dow, the S&P, the NASDAQ, they're all way down. Gold and silver, certainly, and in particular, in this case, gold, it hasn't made anyone wealthy, but it's held its own. And I think in the environment we are about to find ourselves immersed in, he or she who loses least wins. Now, I would also like to say this. Look at the extent to which the government has distorted the economy with inflation, and where asset prices reach astronomical levels, counterintuitively, if you will. I think that gold and silver represent the canary in the mine shaft, and I think there is a concerted effort by the powers that be to not let gold and silver explode higher. Now, I think at some point they're going to have no choice. I think at some point the market is going to do this on its own, and to the best intentions of the central planners who would like to keep the price muted, because what rising gold and silver signal is trouble with the currency, trouble with the economy, trouble with the system, the whole Western system. And I think we're at that moment right now where they're really trying their best to keep the dollar's main challenger, which I look at as gold and silver, muted on the sidelines. Now, we can get into why I think later this conversation, why I think that's going to prove futile. But what I really like to get across is that I think there is a concerted effort to keep gold and silver in a tight trading range. And people are tired of waiting for this breakout that should have already happened. Look, I've been doing this a long time. I'm tired of it too. But I've always said that gold and silver are not an investment, they're wealth. And in a period of time like we're experiencing right now, you need to remind yourself of that. You need to look at all the asset classes, which are down substantially, and yet gold is up a little bit. And that hasn't made you wealthy. But remember, in a deflation, depression, and I know we're in massive inflation, but I think what we are going to witness is perhaps a very, very substantial recession into maybe the greater depression eventually. You'll have a Fed fight it with inflationary policy, of course, but the bottom line is, in the environment we are heading into, he or she who loses least wins. And I need people to understand that you don't buy gold and silver to get wealthy. You own it because it is wealth. And I think there are a lot of people who haven't really grasped that yet. And they're like, hey, if it isn't going to go up now, why would it? And that's something, yeah. And that's something that I think is fair, but I also think will have its time. And I think people are just a little bit, they're a little bit disenfranchised, if you will, by the lackluster performance. And I understand that, but be careful what you wish for when gold and silver finally do express themselves. And I really do think they will. It's inevitable. Be careful what you wish for, because that will be at the expense of stocks, bonds, real estate, perhaps even cryptocurrencies as interest rates rise. So we can get into that, but this is just normal human emotion. I also like to mention that I look back over the last decade, May is our worst month. Every single year, May is the worst month. People are, hope spring eternal. They're getting outside, they're planting their gardens, they're playing golf, they're, if you live up here in the north, of course, I moved to Florida, but I'm back in Minneapolis where I spent 50 years. And look, the minute you get 40 degrees up here in Minnesota, you start, you see people with their windows down and short sleeve shirts. So by the time you get decent weather in May, no one wants to sit at their computer and think about metals. It'll all come back around. This is just a slow period, and it is what it is. Nothing's changed. That's the bottom line.
A couple of things you mentioned there, I wanted to give some pictures because it jumped right to my mind when you said some of the more recent entrants into those who have been stacking metals might have been thinking they were buying something to flip it for a quick profit. And we have a comment on that very point, and it brought up in my mind some charts that I saw from Egon von Greyerz recently, and I want to show those. Troy Lagalbo says in the chat here, some people's brains are wired backwards, lawful. They see the paper as money and the gold and silver as a type of investment. Yeah. So that's backwards. And I wanted to share this. See if you can tell me if you guys can see this. Yeah. Okay. So here, this chart put out by Gold of Switzerland, Egon von Greyerz, and the 100 line across the top here says gold is the straight line at 100, constant purchasing power. And then it's about 120-year chart on the bottom that shows all the major currencies of the world and what their purchasing power, all starting out from the 100 as a baseline, what happened to those over the last century and 20 years. And you can see currency after currency after currency has just plunged from 100% purchasing power that it had back in 1900 at the turn of the last century to just they're all down in the mud at approximately 2% or less. Some of them have just gone away, like the Deutschmark there in the 1920s, in the Weimar Republic, and so on. And then there's another chart that also drives the same similar point home. That unless you want to comment on this, feel free.
As far as that chart, look, the death of the dollar, the death of money, the death of currency is a slow process, and you can see it takes place without people really noticing. It's one of these deals where it's insidious, and you can look. There was a man named Dr. Franz Pick who said all currencies inherently are meant to die. Every paper currency that ever has been has died, and that's because politicians always choose inflation over austerity, and they will do it this time too. They're talking a big game, but the Fed can't raise rates. They don't want to be responsible for blowing up the economy. They'll raise them enough to create some strain and some pressure and some pain. And as I've talked with you and others over the last year, I really do believe that the weaponizing of the dollar, the pushing the Russians out of SWIFT, the deteriorating relations with Saudi Arabia, look, you have a growing interest in selling, whether it be energy or armaments for other currencies outside the dollar. And then you have the U.S. perceived lack of support, I think, for the Saudis' intervention in the Yemen civil war. You have the chance of U.S. getting back into the Iranian nuclear deal. These are things that are greatly upsetting the Saudis. And when you realize that the only thing that makes the dollar the world reserve currency is its protection, is our protection of the Saudi kingdom since 1974, which is now being challenged by Russia and China in joint military cooperation agreements, in selling oil to China in yuan instead of in dollars. This is a break from the dollar hegemony. This, to me, is what will tip the scales. The Fed talking a tough game, I think, is jawboning. I think the market will do it for everybody. And I think this is the scary thing that people need to understand about precious metals. It's the same thing about, paying the premium on your home insurance. You don't come home and say, darn it, my home didn't burn down. I paid my home insurance the other day. It's the same thing here. I do believe that we've set a fire globally and the dollar is going to burn. And I think it will emanate primarily from the dollar's loss of the petro reserve status. And when that happens, interest rates go to the moon, and everything that is sky high, stocks, bonds, and real estate, are all inversely correlated to a rise in rates. And that's when you see the importance of owning precious metals. And I think people need to understand this. It's wealth. It's not to get you wealthy, because when you become wealthy holding precious metals, it will come at the expense of everyone around you and everything that was good about living in this country. And so, look, the most depressing part about my job over the last 2 years is feeling this way. Because for my whole career, I always viewed gold and silver as wealth, something I've accumulated every 2 weeks for 33 years as a promise to my father when we started this company together in 1989. And so I've always viewed it as wealth that I hoped I never need to use, that I would give to my kids someday. And I would be glad if I needed to use it for an opportunity or an emergency. But if not, it's a way to pass money on outside of probate, very privately and securely. But where we are right now, I think we are witnessing something that no one has witnessed in several generations, and that is a move away from the dollar as the singular world reserve currency of the world. And I really, truly do believe that you could argue that it was an intended consequence, that the central planners realized that we are so far down a rabbit hole that if they didn't do something like weaponize the dollar, kick the Russians out of SWIFT, steal their money, impose sanctions, do all of these things, that we would end up, they would end up, or we would end up in a very, very, very bad place. And I don't think they want to be the group that is responsible for breaking up, or blowing up this economy. Instead, it will be an enemy. It'll be a scapegoat. It'll be the Saudis. It'll be the Russians. It'll be the Chinese. And I think it's important to remember that, the countries representing the sanctions, Europe and the United States, only represent 15% of the world's population. But the countries that are representing 85% of the global population, China, India, Africa, South America, they're all still trading with Russia. And so the sanctions are meaningless. But what you are seeing is a move away from the dollar hegemony where 85% of the world says, you know what, screw it. I'm going to trade with whoever I want to. And I think by weaponizing the dollar, all of these other countries are thinking, are we next? So you've incentivized 85% of the world, let alone the Belt Road Initiative, which is Asia and Africa, 70% of human population, or even a little greater, are moving away from the dollar. That is where I believe in my heart that it all hell breaks loose. And all it would take would be for OPEC to say, listen, we have burgeoning relationships with Russia and China and South America and South Africa. We've decided to open up oil sales to several other currencies, and bang, like that, all those dollars come flooding home. Remember, 15% of the world's population in Europe and America, 85% in the rest of the world, and every single country on the planet has owned dollars, really, since 1974, for sure, when it became the petrodollar. You have to own dollars to buy oil. Well, if that changes and all those dollars come flooding home immediately, if you think inflation is bad now, wait until you see a global dumping of dollars. And then what happens when that happens is interest rates spike to the moon. The Fed doesn't have to do it. They have a scapegoat, and all of these asset classes that are inversely correlated to that event collapse like that. This is why we own gold and silver. And for people who are bummed out that it hasn't taken off yet, I just simply say, you're looking at it the wrong way. It's on sale. And if something that you want to continue to buy and accumulate goes on sale, then that's a good thing, because the mathematics and the economics and the logic behind this, in my mind, don't again signal an inevitability of the dollar losing its singular world reserve status. And that is the only reason, in my mind, that it really doesn't matter today what the price is doing, because ultimately it is, I don't see another life raft other than gold and silver when this happens. And I'm also mentioning cryptocurrencies because you have so much participation on Wall Street in cryptocurrencies. And if you look at how they're tied together, the way that the S&P, the Dow, the NASDAQ, the way they all move in conjunction with Bitcoin and other cryptocurrencies, it's amazing, the correlation. So I would simply say to you, there are very few places safe to put your money now as this unfolds. And I do sincerely believe that the Fed will only perhaps maybe light the fuse. But I think the real problem, the real issue is the dollar's loss of world reserve as Saudi Arabia and OPEC move away from the dollar. And I think that's coming.
In concert with what you just said, we have a comment here from Frederick Newcomb, known to his friends as Rick. He said, I had IRAs, fiat, retirement programs, and investment programs, but until I learned and cashed all that in on PMs, I never had any wealth. It's not huge, but it's real. And I wanted to share that other chart I promised from Egon van Greyerts here. And let's see if I can get this up. Tell me if you guys can see this one. Are you seeing a share?
Just everybody? The top half.
Top half. That's not helpful. Okay, hold on. How about this? Is that
Yep,
better?
there you go.
Okay. So the big blue line here is gold. That is the nationwide house. This is the UK data. So in the UK, nationwide housing prices priced in gold. So if you start with a baseline of 100 there in 1953, it basically goes horizontally up and down, but always around a level back to still 100, so that no significant change in how much housing or real estate house pricing in the UK you could afford for gold. Whereas the green line here is the pound, the British pound sterling index, and you'll see that it disconnects from the gold line here just before 1970, 1969, and it takes off. And if you notice, this is a logarithmic scale. So what used to be a 100 correlation, then it breaks through 1,000 to 1, then it breaks to 10,000, it's above 10,000. So when you're holding precious metals like gold, they're holding their own
Well,
against real things.
let me try to tie that now. This I hope this doesn't come out sloppy, because I used to talk about this a lot, and I pulled these numbers from the Census Bureau probably 7-8 years ago. So I'm a little bit off with the numbers, but I'm going to try to remember, and I'm going to use it exactly what you're saying, but bring it home here in the US. You know, prior to 71, when we left the gold standard, gold was fixed at a rate of $30 or whatever it was back then. Governments could trade in their US dollars for gold at a fixed rate of $30, $35. I'm sorry, I'm not exactly sure the number. But so if you go back to 1960 in the US and you look at the average price of gold, which was, I think, like $35 or $39, and the average price of a house, if I remember correctly, was $17,000. So let me do the math here real quick, because I think I can tie this in. 17,000 divided by, let's call it 39. That's 435 ounces of gold. I think it was $39. So anyways, you'll get the point. In 1960, if you had 435 Krugerrands at or $20 gold pieces that your grandfather left you, you could have used it to buy a house. The average price of a house in 1960 was $17,000. And 435 ounces would have bought it for you. So if you decided to put it in the attic and not touch it and take out a mortgage or find a way to pay for that house, and we look at where we are today, those 435 ounces of gold today represent over $800,000 and $850 maybe. And so you look at the average price of a house right now, it's probably half that, 400, 300. So when you talk about gold since 1960, so for 50 years, earning 60 years, earning nothing but dust, no interest, gold has not only held its own in relation to house prices. That stack of 435 ounces of gold would buy you 2 houses today, maybe 3. Whereas the $17,000 back then wouldn't even buy you, furnishing for the house. So the point of it is that whether you're talking the UK or the US, gold is the barometer. Gold will hold its purchasing power as the dollar insidiously loses value. Going back to that very first chart you showed, where the dollar loses its purchasing power precipitously. Mm-hmm. They tell us, well, it's a 2% per year. I mean, bottom line is that, look, at 2% per year, the law of 70 seconds tells us in 36 years, it's cut in half the value of the dollar. So what happens at 8%? 8 into 72 is what? 9 times 8. 9 years at 8% inflation, the dollar loses half or loses half of its value. So the bottom line is that gold is there because it is wealth. It is not there to get you wealthy. And when you use it to measure against something like a home, whether it's in the UK or the US, even though that asset earned no interest for 60 years, you can see how it maintained your purchasing power and in fact actually increased it as the dollar has accelerated its loss in purchasing power. So it's a valid point, and it's one that I think people should think about as they accumulate precious metals, not to get wealthy, but because it is wealth that has outlived all of these market cycles, that has outlived pandemics, that has outlived 2 world wars, that has outlived German hyperinflation and the Great Depression. So there are very few, if anything, that you can say, assets anyway, that can say that. And so I understand, look, it gets tiring. Listen to people like me say this, well, have patience, it's going to happen. This is a high stakes game, and the players that are pulling the strings understand this. You're talking about a shift from perhaps the US as the world reserve currency and the center of free trade of the universe to it not being. And I think this is a big deal. So you're talking a repositioning of an ocean liner, not of a speedboat. It's going to take a long time, but when it does turn, it'll turn and it won't come back I believe, as the wealth, the real wealth, is moving eastward. If you look at the amount of gold that the BRICS nations have accumulated, Brazil, Russia, China, India, South Africa, I mean, these are the big gold accumulators. Gold's now tier one. And I really do believe with the central bank digital currencies that the BRICS nations, on the back of the Chinese digital yuan, which is already approaching 10 billion in transactions since last year in China, just on the digital yuan, they will use that technology, and they might even piggyback on top of it and issue a gold peg to a central bank digital currency that will immediately challenge the dollar for world reserve. And as I said before, there's your great reset. There comes a massive dumping of dollars, a spiking of interest rates. There's Schwab saying you'll loan nothing and be happy because everything collapses. and I think that's coming. I really, truly do. To one extent or another, I do believe you will see a shift away from the dollar, and it will move towards the east and a currency system backed by assets, not backed by a mountain of ever increasing debt, because it's very obvious that the Fed is backed into a corner. If they do really stay true to what they're saying and they raise rates and sell 80, 90 billion a month in assets, you're talking about the greatest depression of all. You're talking about blowing up the economy, stocks, bonds, and real estate vaporizing as rates rise. And does the Fed want to be, the steward of that? And that's the question. I don't think they do, but I think they've come up with a plan for a reset. And when you have $130 trillion in debt, most of which will never be paid, you find a villain, you weaponize the dollar, you create an environment where you could actually have a reset. Everything starts over. You come in with a new central bank digital currency, and maybe they too will peg it to gold if the gold held at Fort Knox is really actually there. I don't see a way around it. And this all circles back to the reclassification of gold as tier one. Why in the hell would the Bank of International Settlements have done that if it weren't for it to be central to what's coming next? And I do think that is coming next, a system backed by gold. It will not be convertible, because Charles de Gaulle proved that convertible currencies convert, as he tried to drain all the gold out of the treasury. But at the same time, I think it will be pegged to a new currency, whether it be a BRICS currency, a digital yuan, or the dollar, with distributed ledger technology.
Sorry.
Which will show the immutability of the gold and the veracity of the gold being held backing the new currency system, and will immediately inspire confidence. And I think it's coming, and ultimately will come here to the US as well. But this is why you own gold and silver. It's not to get wealthy. It's because this is the type of environment. It's the perfect storm. Inflation roaring at all-time highs, debt at all-time highs, war in the Ukraine, the moving away of the dollar as the petrodollar, deteriorating relationships with Saudi Arabia, with China. I think we are entering a period of time that is unlike anything anyone in this country has seen, maybe ever. And I think it's important people kind of recalibrate the way they look at precious metals, and don't get bummed out right now because the inevitability of this happening. It's going to happen. Either you see inflation roar, or you see rates rise enough to break inflation, which blows up the economy. One or the other. Both are unpleasant scenarios, and I don't see the ability of a soft landing. Heck, you're getting all of these bank CEOs like Jamie Dimon coming out and saying there's a hurricane right outside our window. And I think it's true, and they realize it. And how it happens, when it happens, don't know. But this is why you accumulate gold and silver as often as you can. This is why I've been buying it every 2 weeks. And if I have to use it, I'm damn glad I have it. If not, it goes to my kids. But I will tell you, in my heart and in my soul, I believe we're going to have to use it to some degree or another, as the dollar is precipitously losing value. And I think we ain't seen anything yet, truthfully.
One of those evidences of the dollar's loss of value and destruction of purchasing power is inflation of the bubble, the everything bubble, including the stock markets. Rach McD says, does Andy think the stock markets will have another melt up?
Maybe. I mean, as they try real hard to inflate the dollar, maybe. But no, I mean, look, ultimately rates have to rise. So maybe there'll be a brief moment where you see a melt up. Look, I've been wrong about stock melt ups for a long time. I'll be the first one to admit it. I'm always early. I've been way early in this, and I've missed out on a lot of gains. I think when I'm right, ultimately, I'll be glad I didn't participate, because it's hard to back away from, making 40 years worth of gains in the stock market, or just go back to 2008 and look at the gains we've seen since then. Look at the balance sheet increased by the Fed at the same time. It was 800 billion in '08. It's 9 trillion right now. Do you really think there's not a coincidence in this make-believe, illusionary valuation world that we live in, where the Fed has pumped so much money and distorted asset prices to such a degree? I find it comforting that the distortion in asset prices hasn't affected precious metals, actually, because I think it explains a lot why they're trying to hold it down. It explains they've juiced everything up to a level to keep the game going. But what is going to stop the game is rising rates. And when rates rise, that's when you see stocks find fair value, stock markets collapse. So could there be? Sure. Ultimately, I think it's going to go the other direction. And I think to wait for that moment is foolhardy, because I think it will happen very quickly. It'll happen on a Sunday night where you see an announcement by OPEC. By Monday morning, the markets will open up, limit down, and I think that will continue. That'll exacerbate. So pigs get fed, hogs get slaughtered. So if you do think that there'll be a melt up, you start to limit your exposure to the stocks and hope that a smaller allocation in a melt up would make you a nice return without risking the base of your pyramid to the potential. And I think that the potential for a market meltdown ultimately is far greater than a market melt up, because the Fed has, look, when I started in this industry in 1990, interest rates were at 9%. So from 9% to zero in 33 years, look at the run in the bond market. I mean, that's the biggest bull run of all time. And that has juiced the trillions of dollars the Fed has thrown into the system, has juiced the stock market, the bond market, the real estate market. But more than anything, has created distortions and misallocations where, look, I would argue that most of these stocks, the valuations are stupid. They shouldn't be this way right now. And if we do see a melt up, I could argue it would be the last melt up that we'll see for a very long time. And I don't think it's worth risking the potential of it going the other way.
There's a question here. You've mentioned gold in the role that it plays in preserving purchasing power. And we mentioned those charts from Egon von Greyerz that showed it versus fiat currencies, that showed it versus real estate. Jake Perigo says, ask Andy about gold sales. We've talked about silver a lot recently. What's going on with gold?
Over the past 2 years, which have been our two biggest years in 33 years, over 95% of every sale we've done has been in silver. Ultimately, I believe, and I've told almost every client who's bought silver from me, that ultimately I believe the place to be ultimately is in gold. And I'm sorry to Chris Marcus and to Big Swear and to Wall Street Silver and all the folks who are huge silver bugs. I am too. I am. And I think it's the value proposition of a generation. But ultimately, you want to be in gold because of its tier one status, because of the massive accumulation by the central banks, because it will be pegged to a new system. But I think there are a lot of people who have jumped onto the silver gold ratio trade. And so the major drive, sorry, I'm fighting allergies. I always had allergies back here in Minnesota this time of year, and my eyes are watering. I apologize. So the major drive has been in the value found in silver. And honestly, I don't think there's better value out there. So when people ask me, should I buy gold and silver? I answer it this way. Look, ultimately, you want to be in gold, but silver is a pathway into getting it at an 80-to-1 ratio. It's the value proposition of a generation. And so yeah, I think the premiums on gold are quite low, and in fact, not much higher than they've been historically, because it's the forgotten monetary metal. It has been, as literally 95 or greater percent over the past 2 years, our biggest years ever, have been dominated by silver of all of our sales. So gold is the premiums are fair, but that can change pretty darn quickly too. We have seen, when someone comes in with a 6 or a 7 figure order, very often it is dominated by gold. But even still, if it weren't for the logistics issues with silver, I would tell people 100% silver is the better value. But ultimately, I see a time where we convert to gold. Now, is there a flaw in that argument? Sure. That flaw would be maybe it becomes difficult to source gold when we want to switch it. But remember, I talk about the first time I started doing podcasts in 2010, we had an 85-to-1 ratio, very similar to where it is right now. And in 2010, that was the second time or third time in human history to have been that high, 5,000 years. And I told everyone, trade your gold to silver right now. Well, within 8 months in 2011, you had $50 silver and $1,915 gold. That's 37-to-1. So if you did that and switched back to gold, you made over two and a half times what you started with. That's what I mean about it being a pathway into more gold. And so, look, silver's a better value. Gold is only less than 10% from its all-time high. Silver's half of its all-time high or less. So gold, the sales in gold are nowhere near what they have been in silver. That'll change at some point, but 5% of our sales, 10% have been in gold, 90 plus in silver.
Some of our viewers who are used to our short weekly market updates might not be able to hang out long with us during this longer format one for the live stream. Wanted to give them a chance to whet their appetite. If you could tell us about the weekly special. We haven't had a weekly special for the past week or so because of not being able to have these updates. But if we could talk to us about that, then we'll get back to a few more viewers' questions before we wrap. Oh, we lost your audio. Let's
Sorry about that.
There we go.
So there we go. Sorry. So we've been talking a lot about silver in every one of these specials for the last year and a half. But here again, I want it to be very clear. In my mind, ultimately, you want to be in gold. And if I had one asset to be in and I can only make one trade, it would be in gold. It wouldn't be in silver. Albeit, I want to be very clear. I think silver is the value proposition of a generation. There are very few things that offer the potential, the utility, and the value that silver does. But I can't get past the tier 1 revision of gold and the massive accumulation by the central banks. Why would they rate it tier 1? And so in that spirit, I'm talking about gold tonight. We're going to have a American Gold Eagle special. We have the 1 ounce, the half ounce, the quarter ounce, and the 10th ounce gold American Eagle. And we have the 1 ounce and the half ounce, both at $105 over melt value. We have the quarter ounce at $85 over melt value, and the 1/10 ounce at $45 over melt value. And if I had my druthers and I could only buy one coin, I would buy the 1/10 ounce American Eagle. Now, they're the highest premium coins in the market for gold bullion. They're also, if I could mention one item that has held its value premium wise better than anything I've ever sold, ever in 30 years, it's the 1/10 ounce American Eagle. They always have huge premiums, both buy and sell. And I think it's part of the fact that they're massively demanded and made in very short supply. But whether, excuse me, you're playing poker or driving on a crowded highway or investing, you can never have too many options or too many outs or too many exits. And the 10th ounce Eagle gives you such great utility. And it's marked 1/10 ounce pure gold. You have Lady Liberty, you got the American Eagle. It is the most, it provides the greatest utility out of any gold that you can sell. It also, or buy, but it also has the highest premium. I love them. And they're my favorite gold bullion coin without fail 100%. But do know that you pay high premiums, and those premiums are not dealer imposed. Those premiums are mint imposed and primary distributor imposed, and they don't make very many of them. And in all of my career, the premium on the 10th ounce eagle, I don't know if it's ever gone below 7% on the buyback, where we'll pay at least 7%. Right now, it's much higher than that. I don't know exactly, but I bet it's 12, 13%, 11, 10. I don't know. I have to look. But it's high. The premium on the buyback bid price is high, and it's retained its value better than any single item I've ever sold in 30 years.
I'm trying to share this so we can see this, the special, and still see us. Can you guys, I don't see how that's coming out.
It's perfect. It's perfect.
Oh, okay. All right. So while we've got that on the screen, folks, feel free to add your questions to the live stream chat. We'll get them in front of Andy here. We got a few more minutes left before we got to wrap. And just while we're waiting for that, Andy, somebody put in there, take bee pollen for your allergies. So there you go, bee pollen.
Well, you know, I live in Florida, so I'm only here for 2 weeks or 10 days, but it's amazing. I come back, my eyes start watering, I start coughing and sniffling. It's crazy, but Minnesota will always be home. It's not where I live any longer, but it's home. But thank you. I will try that while I'm here. I appreciate that.
Fair question here from Homer Talk. Are melt and spot the same thing? They are related, and for a 1 ounce coin, they're the same. But what happens on a fractional coin?
So the reason I talk about melt and spot is that spot, typically 1 ounce coins are valued off of spot, and the melt value would be for a 10th ounce coin, as an example, or a 1/4 ounce coin. In other words, you could say spot divided by 10, but to use melt instead, I think, is a better way of doing it. So,
all right,
so
just to clarify for folks, so for a 1 ounce American Gold Eagle, you can take the 1 ounce spot price and add $105. That would be your retail purchase price for 1 ounce Gold Eagle. For a 1/2 ounce Gold Eagle, take the 1 ounce spot price, divided in half for 1/2 ounce of gold, then add the $105.
Correct.
For one coin. For a 1/4 ounce, take the spot price, divide it by 4, add the $85 for a 1/4 ounce Gold Eagle. Right. For a 10th ounce Gold Eagle, take the spot price, divide it by 10. That's the gold. That's the melt value of the gold in there in that coin. Add $45. That's the sell price for the coin.
That's right.
Okay. Let's see if we've got any new questions here. Interesting. You said, so what makes you say gold is where you want to be ultimately?
Well, the biggest reason I say that is that the Bank of International Settlements reclassified it as Tier 1. Since the end of World War II, there's been one Tier 1 asset or two, US dollars and US treasuries, which is a riskless asset by central bank terminology, whereby the central banks use it. It's a riskless asset. And it's the only other Tier 1 asset, reserve asset in the world. And so when you see the central banks like Russia, like China, like India, like Germany, like Turkey and Hungary, and I mean, all of the central banks throughout Europe and Asia are accumulating gold, and it's reclassified Tier 1. Why? Why gold? Why not special drawing rights from the National Monetary Fund? Why not euro? Why not yen? Why not yuan? Why not something else? And they chose gold. And so I think that when you see the most powerful bank in the world, the central bank, reclassify gold as a riskless asset, after almost 70 plus years of it being Tier 3 asset, which meant only 50% of its value was calculated on the balance sheet, central bankers didn't want to own it. It cost money to store, it paid no interest, and you could only calculate 50% of its value on your balance sheet, which would be a detriment to selling bonds or doing business based off the strength of your balance sheet. So it would be easy to see why the central banks would have been very willing to give their gold to the US. We would hold it for them, give them money. They would take that money and buy treasuries. So now they didn't even have to worry about storage, and they were getting a return on their gold, and the dollars that they were earning were redeemable for gold. So it was as good as gold. And now you have the best of both worlds. You can always get your gold back, and you're getting paid in dollars interest for gold that isn't earning any interest, and it is redeemable into gold. So when you see the fact that they reclassify gold as tier one, to me, it tells me that is going to be the place to be in the future. And they wouldn't have done it otherwise. And maybe I'm wrong, but I don't see any logical reason to levitate gold to tier one status if that wasn't part of the plan.
We've got a question here from Rainbird who says, Andy, what are the premiums on 90% silver? So I noticed this morning on our pricing sheet that the least expensive is random year dimes and quarters, and they were at 8.25 over spot per ounce. I don't know if you have anything else to add other than it goes up from there. And if you're up to Morgan silver dollars, it's quite a bit higher.
Interesting. No one calls it junk silver anymore.
Yeah.
Because it's not. In fact, it's the highest premium thing we sell next to Silver Eagles. You know, it's hard for me because when I started in this industry, it was junk. I would buy it at under melt value and sell it for 10, 20 cents over melt value. The silver was $3-4 an ounce back then, which is crazy to even say. But yeah, it's very difficult to come by. It's emblematic of how tight the supply is in this industry. People don't want to go back into fiat, even though it hasn't really performed at all, silver, over the last couple of years. In fact, it's gone nowhere but sideways and down. People understand inherently the value in it and where it ultimately will go and the utility that it provides. And if not, they'll give it to their family. No one sells it. Trying to find silver that hasn't been made in almost 60 years or longer is a challenge. And so premiums are really high on them, and really have been for over a year now. So 8.25, I believe, is what you said, and that's right.
Yep.
$0.50 get even higher than that, and it's the easiest way to trade now. I don't know. I think that if you're paying that kind of a premium, whether it be for an American Eagle or for junk silver, you need to think twice, because maybe this is the new reality. You know, as Rick Rule says, 0.5% allocation to precious metals across the whole financial platform in the United States, or the whole financial matrix in the US. Maybe when it reaches 5% or even 2.5%, you know, from where we are right now, that's a 5-fold increase. And then you see premiums even go higher than where they are. I think there are better values out there, but if you want the greatest utility that you can possibly have in precious metals, in my mind, it's dimes and quarters, but you're going to pay a hefty premium for them. And again, it's worth noting that those premiums are not one-sided. We're paying really high premiums on American Eagles, on junk silver, on all of these items that are expensive to buy. There's high premiums if and when you should decide to sell them. And that's the only way we're able to entice people to sell it, so that we have it to offer, which we do have some, but not a lot.
There's a related question here, and this again is theoretical, but it's worth discussing because I think it gets people perspective thinking. Iggy Snob says, question, what are the chances that silver could divorce itself from paper through the premium? In other words, $25 spot price with a $50 or $75 premium?
Very well, very likely. I think you'll see premiums. Look, when this moment happens, when you see, if it does, when you see rates start to rise enough to really rattle the markets, people are going to freak. Where do you put your money? Traditionally, they've been in bonds, but the bonds are the mother of all bubbles, the bond market. And when rates rise and things start to fall, I think there will be a mad dash into what is a revolving door, a very tightly wound revolving door that cannot handle that type of influx. So yeah, I think you will see rising premiums, dramatically rising premiums in that moment. Maybe not until then, but I find it crazy that 0.5% allocation from the Harvard Endowment Fund to Joe Sixpack, the whole way across, in the moment that I see coming, that rapidly changes, rapidly. And that's when you see those super high premiums. So I can tell you one thing, this is why they say there's no bull market like a gold bull market, because it speaks to people's concern and fear. And if you're scared that your net worth is evaporating in a rising, spiking interest rate market, in a dollar dumping devaluation moment, you know, stocks, bonds, real estate, and the dollar all dying at the same time as dollars get dumped by the world because they don't have to hold them to buy oil anymore. They can buy their local currency or currency that they would rather own to buy oil. When those dollars come home and collapse, the dollars lose value rapidly, way more than they already are now, and interest rates spike and kill everything. Where do you put your money? I think people will run to the safety of physical precious metals. And I will go back to what I was saying earlier. He or she who loses least wins. There's a term in economics we've talked about called Gibson's paradox. Paul Volcker raised interest rates to 19%. It killed the gold bull market in 1980 because you could buy treasuries at 19%. That tells you that in 3.5 years, your principal doubles using the rule of 72nd. Who wouldn't buy US treasuries at that rate? High levels of interest will run inverse, and it's the real rate of return, not the nominal, the real rate of return. So factored against the inflation. If the real rate of return is significant enough, it kills the gold bull market. There's no reason to own it in theory. But this is different because I think this goes well beyond interest rates and valuations of assets. It goes to the heart of the dollar as the world reserve currency. And all world reserve currencies have typically go back all the way to the 1600s. They have a 40 or 50 year typically lifespan. And we left the gold standard in 71. Or the gold window was closed. Gold standard is not the right terminology. The central banks prior to 71 could trade their dollars in for gold. We couldn't, but the central banks could. Since then, we've been totally fiat, and we're already living on borrowed time, going on 52 years. So could it be the beginning of the end of the dollar as we know it? Yeah. And when that moment happens and everything around us falls like that on a Sunday night, Monday morning, you will see premiums higher than you could ever imagine. And I think that's not a good thing. That's going to be a scary thing.
We only have about a minute or two left, so I wanted to give one more flash peek at the special for those who might have joined us late. We've got hundreds and hundreds of people watching, so I'm going to just pop it up for 1 second here. And anything else you want to add about this before we get ready to wrap up?
I think it's very emblematic of what we've been talking about of the real interest being in silver. You look at gold eagles at 105, you're talking 5% premium, 5.5, 6. That's the same premium that I saw my entire career in gold eagles, my entire career, give or take a percent or two. Yet silver eagles, the premium on them right now is 4 to 5 times greater than I saw it my entire career. The value in premium is here. It's a function of supply and demand. And you can see where the real demand has been. But when that ratio shifts, or when the dollar collapses, or when that moment happens where people wake up, most people will run to gold. And I think that you will see those super high premiums in gold as well. And that's just because it's a tiny fraction of the amount of wealth that's been created and the amount of money that's out there. And if everyone out there were to just put 1 or 2% in the US of their assets into physical precious metals, by the end of the week, there'd be nothing left. And what you could find would be ridiculously priced. And that's not a big ask in what I see coming. So again, I hate being pessimistic. I hate people thinking that I'm pushing fear and FUD. I don't see any way around what's coming. And I think we're too far down the rabbit hole, whether it's the Fed that does it, or OPEC or does it, or the Chinese who do it. I think something's coming where the dollar is going to be forsaken, and it won't garnish the same demand that it has for the past 50 years. And when it loses its demand and it starts to fall, there's going to be serious repercussions because of the distortion created by all of the assets being inversely correlated to the manipulated interest rates. The real manipulation isn't in gold and silver, it's been in interest rates. And it's distorted all the asset prices. The reason they manipulate gold and silver and keep it down is because it's the kryptonite to the whole system. Rising interest rates would signal the frailty of the dollar, the weakness of the dollar. And so when that happens, when that moment happens, whether it be by the Fed or by the market, that's when the importance of having a shelter outside of the pillars of wealth in this country, which have been the place to be for 40 years. I think it won't be the place to be. And I think this time it'll happen overnight. It'll happen so fast, it'll freak people out. And so that's when you see the fallacy or the potential problem with my argument of switching silver to gold. And that is, it could happen so fast that you're stuck with silver, which wouldn't be the worst thing in the world. But ultimately, I think you could see massive problems getting gold in that moment, because there are very few places. I mean, I'd like anyone in the chat, tell me, where else can you put your money? Where? And I try to think hard. I can't go up there and say something to the world out here on YouTube if I don't believe it. Where do you put your money? Tell me, everyone out there, where do you put your money that offers any safety and a semblance of value? All of the things that we've invested in for so many years are so far overvalued, and the potential to come down in this rising interest rate environment, I think makes holding traditional assets as dangerous as it's ever been in my career.
Just on a closing note here, I think an underscore for that, Peter Frovine says, when the weatherman warns us of a coming hurricane, do we say he is selling fear? We should all be grateful to brave men like Andy. Thank you, Andy.
Well, thank you. God bless you. I appreciate that. I struggle with it an awful lot. I say the same thing. I say the same thing over and over and over again. I constantly study, I constantly read, and I keep coming back to the same thing. And that is, what has made this country what it is being the world reserve currency. It has allowed us to live above, rightfully so, above our standard, the standard of living that we should be living under. It has allowed us to live well above it. And I think if we lose that, which I ultimately do believe we will, due to the mismanagement and the weaponization and the bravado where we can tell people who can and can't use the world reserve currency, big mistake. And I think the consequences for that have already been set in motion. And you put it all together with the Belt Road Initiative, 75% of human population. You have 85% of human population still trading with Russia. You have gold reclassified tier 1. You have all the central banks buying gold. You have the repatriation of gold from the New York Fed and the Bank of England. You see massive deliveries off of COMEX and the London Metals Exchange. I mean, if you can't put all of these things together and see the long game that's going on here right now, then you never will. And so that's why I think it's inevitable. And then you look at the first European invasion in, I don't know what, 70 years, and inflation roaring at 40-year highs. And, the backdrop could not be more perfect for rising metals. And you add to it, ultimately, perhaps the end of the dollar as a singular world reserve currency. It's getting to the 12th hour. So thank you for saying that. I appreciate it. I struggle with it a lot because it's hard to try really hard to be impartial and to be objective. When you say these things, you don't sound objective. You don't sound impartial, but I am. And I would rather be in a world where I could put my money into stocks and into bonds and forget about it and look at gold as a small portion of my assets. But gold and silver represent a massive portion of my assets. I have pared down everything else because I see no other place to safely put it right now that'll allow me to sleep well at night. So if there's ever been anyone that does what he says, it's me. And so if the ship goes down, I'll be driving. And if not, I'll be glad that I took the steps to protect my family. And if it goes to where I think it will, it's going to be a scary time for all of us. even those of us who aren't bankrupt and destitute, I think we'll have bigger problems at hand. And, look at what they're talking about with food shortages. And just here the other day, another food processing plant burned down.
Yeah, we're gonna have to get back to that next week, because we've got some guests coming on about preparedness exactly on that topic. And it's a serious time, folks. From our roots as reluctant preppers, seriously, they say, I would rather be 7 years early than 1 day late. It's no longer years. It may be down to weeks to months. You've got to have an emergency food plan and get your food security figured out. Andy, we're going to have to wrap here. There's two things before we go. One, anyone who would like to get a free PDF for a guide, it's called the Golden Guide to Investing in Gold, that gives you lots of tips, answers lots of frequently asked questions, lots of clarifications about reporting and taxes and all kinds of stuff like that. Just email us at libertyandfinance@protonmail.com. That's libertyandfinance@protonmail.com, and just say free guide, and we'll send you a link to that, and you can download it. And right now it's at the top of the chat if you want to grab that link right now. And the other thing is, Andy and I are going to be at the Natural Resources Symposium in Boca Raton, Florida at the end of July. We'll talk about that more in the coming weeks, but just want to make sure everybody was aware of that. There's a link to how to get signed up for that in the description of this video. Don't want to miss that. It'd be fun to see you. Andy, got to get you some rest, man. You can get your allergies taken care of. So
I'm all good.
You go.
It's all good. I have dealing with a sick dog, a million other things, and I raced back to the hotel room to do this. So
well, thank
sorry
you.
For the craziness, but scatterbrain. My brain is a million places, but it's always good to be here. And the bottom line is this, Dunnigan, and I'll let you go. For the first time in my career, the first time in my life as an adult, I'm really concerned about the trajectory of the country and the trajectory of the dollar and the repercussions, ramifications of what I see coming. And so for all of you out there who are bummed that you bought gold and silver and it hasn't performed the way that you thought it would, it will. And in the end, it will. But it's not to get wealthy. It is wealth, and it will exert itself as wealth in the end. So anyways, that's all I got. I appreciate you, Dunnigan. I'll look forward to seeing you next Tuesday.
Always great to have you here, Andy. Guys, everyone, thank you for joining in this live chat. Thank you for submitting your questions. Thanks for your patience. When Andy was unavailable, we'll try to get back here on the cycle of weekly market updates and weekly specials every Tuesday night, 9 p.m. Eastern, here on YouTube and Brighteon, Rumble, SoundCloud, etc. So thanks everyone for joining us. Andy, always great to have you.
Stay well. You too.